Good morning, and thank you for joining us in Florida Climate Week. My name is Dawn Sheriffs, and I'm the Florida Director for the Environmental Defense Fund. I'm thrilled to be here today to talk to you about a really important climate-related risk in Florida, homeowners insurance. So joining me today is a subject matter expert who very literally wrote the book on homeowners insurance policies. Carolyn Kuski is the Associate Vice President for Economics and Policy at the Environmental Defense Fund. And before we sort of jump in, for those of you who are not familiar with Environmental Defense Fund, we are a global organization focused on science and economic solutions to the most pressing problems challenging our environment, and climate change is right there and central to all of our work. I think we go from this environment where the entire planet is grappling with what climate change is already bringing to us in terms of impact and the ones that we see in the future, and some of the stresses about how we can get to reduced climate impacts and lower emissions so we can really solve the whole problem, right? That's at the macro level. But we also have to look at the local level and how, individual businesses, families are navigating this really complicated landscape, which is a mix of science and policy and all of these things, and in a constantly changing environment, right? So hopefully today we'll be able to dive into a little bit the issue of homeowners insurance specific to Florida. And as our state director, I can share with you, it is the talk of the town and has been for several years, because homeowners have seen significant increases. Just the last 3 years alone, 102% increase is not considered abnormal for a Florida homeowners insurance policy. My own policy went up 93% from 2020 to 2024. And so we're really looking at significant cost increases that impact families, and we're already paying 4 times the national average. And so just wanted to share a little bit of that context, because I think as Carolyn and I chat this morning, we're going to be, really connecting the dots on what the policy risks are, and then how that's going to ladder down to what families are dealing with, and even how it's going to impact affordable housing opportunities in the state. So welcome, Carolyn. So glad that you're here.
Thank you, Dawn. Thanks for having me. It's always wonderful to talk with you about these topics.
So recently, you had the opportunity with your colleague Lori Metters to collaborate with the Florida Policy Project. Can you tell us a little bit about what that collaboration looked like?
Yeah, sure. So we worked together to put together a report that summarized the current dynamics in the Florida property insurance market and a bit of the history of where Florida's been, and maybe with a look ahead to where we think they're going. The Florida market has a lot of unique things, as you know, being a resident there, and your policy with Citizens is one of them. While many states have programs for residents who can't find homeowners insurance in the private market, Florida's is one of the biggest and has been growing in recent years too. So the report looks at the kind of structure of the market, what's been going on, how Citizens fits into it, and what concerns we might face going forward.
It's also really important in Florida to sort of understand how we differ in our risk and also in our policies. So appreciate that you really are able to bring that perspective. I think maybe we should just start off with having a bit of an understanding, a primer, if you will, on what the role of climate change is in insurance pricing and how these things are related.
Yeah, it's a good question, because we've been seeing, as you noted, increasing premiums, and not just in Florida, in many places around the country, concerned about insurers leaving markets. And a lot of this comes back to growing climate risk. So kind of at a base level, the cost of your insurance policy reflects the risk that your insurance company is going to have to pay you a claim. So if the risks go up, so do insurance prices. So as climate change is fueling more frequent and more intense storms outside of Florida, more intense wildfires, we're seeing more hail, more intense downpours, all these types of weather-related extremes are getting worse, driving up more damage. That means insurers have to pay more claims, and that means they're going to charge more for premiums. So at a very basic level, increasing climate risk means more challenges in affordable and available insurance, because when risk gets too high, in the extreme, insurers will say, we can't offer insurance at a price that people are able to pay anymore. And that's when we see those kind of exits from markets that kind of make the headlines. I will caveat a couple things, though. One is that the price of insurance only reflects this year's risk. They're only pricing for what they expect their payouts to be over the life of your insurance policy, which is 1 year. And so I think that's important to keep in mind because future climate risk is not in today's insurance prices. And when prices are already this high, that can be a bit alarming, right, for consumers, because it does mean that if we see risk keep trending upward, we can expect to see continued challenges with pricing and availability in the insurance market. It also means that looking at your insurance premium today isn't a great indication of what kind of risk you might face over the years you live in a place, or, aren't a good indication, right, for communities thinking about like long-term planning. So we have to kind of think about the broader picture of risk in the context of the insurance policy as well. And let me just end by saying, because insurance prices, generally reflect risk, one of the best ways to help lower the cost of insurance and stabilize some of the volatility we've seen in markets is investing in risk reduction with an eye towards the fact that the risk of today is not going to be the risk of tomorrow.
Yeah, I mean, you said something really compelling there that we need to be thoughtful about. If we're only looking at insurance based on, this year, but we're taking out 30-year mortgages from our bank that are, that we can't carry without homeowners insurance, we're literally in an environment where we're looking at people sort of trying to participate in home ownership and having no idea what their long-term costs are going to be, especially in a in a state that's famous for an aging population that's on a fixed income. These are not areas that folks have a lot of flexibility to now have, significant increases in their housing costs. They thought they had a solid plan, right? They bought a practical home. They had a 30-year mortgage. They were planning to pay that down heading into retirement. And now they're going to get these additional costs when they're least able to adjust for it.
Yeah, I think it's really scary. And it's an important thing to keep our eye on and to think about how we can develop some longer term policy thinking to make sure that people aren't shocked by sudden shifts in the insurance market, like you're saying, because if policies are just renewed each year, you could come up for renewal and all of a sudden, as many homeowners around the country have found, your insurer says, I'm no longer going to offer you coverage, or I'm only going to offer it, but it's double the price. And those kind of shocks can really hurt families financially. And then, exactly like you said, ripple into housing and mortgage markets as well. I'll also flag something, but maybe just to make sure everyone understands, because it's so relevant for Florida, right, is that we don't have hurricane insurance in the US. We have wind coverage, which is in your homeowner's policy, and flood coverage, which is through our federal National Flood Insurance Program. And so that makes these insurance conversations, especially about pricing, extra difficult in a hurricane-prone state like Florida, because to really be covered from hurricane damage, you have to have two policies, both of which are getting more expensive. So yeah, it's just a double challenge.
And those can be really complicated. I'll share that we had a personal experience in Hurricane Ian that a property that we've had for a long time in Orlando had catastrophic flooding, needed a gut renovation. It was a condo, and the condo homeowners association held the flood insurance. There was a policy in place. Even getting those funds released and getting the construction done became a almost 2-year effort. And there are still units in that complex that are not restored, and the residents cannot live there. And it's really, really devastating because those folks still owe their mortgage. They still owe their HOA fee, and they need to find somewhere else to live for almost 2 years, coming up here in a couple of weeks. And so it really is got some challenges associated with it. I really want to hear about, what you said about how we can focus on risk reduction to sort of long-term address the rate increases. But I also want to make sure that we loop back at some point to talking about what shared risks looks like and how fair pricing, works in a state that has, 1,400 miles of coastline, right? That's pretty low-lying, propensity for hurricanes. And, some people choose to live waterfront and others, happen to live in places with lower risk, and sort of how some of that all gets put together. But let's start with the risk reduction, because I think that's the very first sort of low-hanging fruit of fixes we can address.
Yeah. So as we were talking about, since insurance prices reflect the risk, if the household or community invests in risk reduction, it should show up in lower insurance premiums or greater insurance availability. Now, there's a couple more nuanced challenges here. One is making sure that insurance companies do give credit for all the risk reduction measures that are in place. And there are many states that have requirements, for example, that if you build a fortified home, which is considered the gold standard for withstanding wind damage from hurricane, that your insurance company gives you a substantial discount to make sure that risk reduction is reflected in your premium. In order to get kind of this insurance credit for these types of risk reduction measures, though, the insurance company really does have to be confident that you've done them and that the work has actually been done and that the home is safer. So with fortified construction, for example, you actually have to get a certificate from someone who's certified to issue them so that the insurance company, has proof that you've actually done these things. So it's a little bit of a process, but it can be well worth it for households. There's sort of less easy measures to get credit in lower insurance premiums when it comes to flooding, because a lot of the measures too that would get you lower premiums can be very expensive. Like elevating a home is not a cheap undertaking. Fortifying your roof can be much more cost effective. I think that we also need to pay attention to the rebuilding process, because that post-storm period when we're rebuilding homes and repairing them is a time to make sure that we are doing the risk reduction measures for the future climate risks that we face. And so that's a time to make sure we are building safe and strong and incorporating those measures. And that requires a number of things. It requires having the money to do those upgrades. So we've been, for example, thinking about how to make sure that insurance companies can give you some extra funds to pay for those extra retrofits that might make your home safer, for example, while you're rebuilding, because a lot of them are much more cost effective if you're doing them at the time. The extra difference of getting a fortified roof once you're already replacing your roof is a lot smaller than if you're tearing off a perfectly good roof to put on a new one, right? So how do we make sure at those moments we do the little extra investment in safety, but also making sure everyone's aware of them? There are people qualified and trained to do that kind of building too, right? That we have a workforce that knows how to build climate safe homes as well. One last point that's a lot trickier is the land use question, right? And are there places that are becoming so risky that the insurance prices are just going to be continually unaffordable? And we need to think about differences in where we're siting homes and infrastructure.
I'm not sure if you're aware, but Florida used to have some of the most forward-looking growth management policies in the country. We had a Department of Community Affairs that really made sure that we had, especially in a state that has grown so fast population-wise, that we had sort of a coordinated approach to how we would do some development. Was it perfect? Of course not, but it was eliminated in the prior governor's administration. And so, I think it's begged some questions about how we're starting to look more comprehensively at where development should and should not go. We have seen projects down in Southwest Florida that got hit very badly by Hurricane Ian, and now developers are coming in and saying, like, hey, there's opportunity here. We can actually build a bigger hotel or a more high-rise apartment here on the waterfront, while residents are still sort of grappling to get their houses back together. And so we don't have a perfect solution. I think one of the things that EDF was really active in supporting this year was some statewide legislation that actually requires homeowners to divulge if the property has flooded, because we're getting about 900 new residents to the state of Florida daily. And those people are coming in, they're not familiar with the geography, they may not be, sort of clued into the flood risk. And, they're purchasing these long-term major investments, which is in most families, their biggest asset. And they really don't understand what risks are there. And so that's something that we know existed in other states. And we really thought it was time to make sure that was part of the disclosure when purchasing a house. Just as you get, lead paint, right? You understand if some of those other risks are available, that this needed to be an education opportunity so that people could make better choices.
I think that's exactly right. I mean, getting better transparency about risk to the housing markets is so important. And you don't want people, like you're just saying, to move somewhere completely unaware and then be trapped in a really risky environment or be struggling with constant repairs that they weren't expecting. So I think that those types of disclosure laws are really critical. And getting a better handle on this challenge of how to communicate changing and future risk. You noted that developers, and I think there are some challenges with misaligned incentives, right? Because if you can profit off the development today, but somebody else is bearing the long-term risk that's getting worse and the occupancy costs are going up, how do we make sure that any future buyer is aware of that and making a very informed decision that they're going to be taking on and able to take on that growing risk?
I think that's an important point. And I think because of the way that the market works, there's a little bit of, I know, in fact, I can point to one of the recent reforms for Citizens was that over time now, Citizens policyholders, whether or not they're in a region that is anticipated to flood, will be required to hold a flood policy also. Now, that's, from my understanding, for two purposes. One is it will reduce the amount of claims and litigation about claims about whether they're linked to a flood or they're linked to something else, to sort of alleviate that. But I think it's also really about lowering the risk in the overall market for flooding and bringing flood insurance premiums down, because much like with car insurance, you get your safe drivers and your risky drivers. And by having everybody paying into the same pool, it makes the system work a little bit. But I do want to talk about what does climate equity and fair pricing look like in an insurance market? Like, how do we make sure that the folks that are making really safe choices aren't having to spend a lot more than they can afford to subsidize lifestyle choices of folks that are in very significantly different income brackets?
I think that is such an important topic of conversation, and one that we're going to be facing a lot in the coming years as state and federal policy on these topics has to evolve. So fair pricing in insurance tends to refer to the idea that higher risk people pay higher premiums and that lower risk people pay lower premiums. That's sort of absent another conversation, which is that often the households that need the financial protection of the most, so lower income households who don't have savings, who couldn't access credit, so really need those financial resources post-disaster, can't afford it. And so how do we make sure that they have access to that financial protection as well? And squaring all these things can be challenging and raise tough policy choices. I think here might be a good time to kind of unpack how Florida Citizens has done this, to talk about kind of what this looks like. So in Florida, the state insurance program, Citizens, is designed to, after a very large hurricane event or series of hurricanes in a season that cause a lot of losses, to actually pay for those losses after the fact, right. Which is to say that if there's a lot of claims that Citizens has to pay out, what they do is they go to the bond market and they take on debt. And they use that debt to pay the claims, and then they have to repay that debt over time by putting assessments, essentially fees, on every insurance policy until they're able to pay off the debt. So the first thing they do is put an extra fee on all Citizens policyholders. So after a big hurricane, it's actually future Citizens policyholders who are paying the claims of like that year's losses. But if that's insufficient, so it's a really bad storm or series of storms, they actually assess all insurance policies throughout the entire state, with very few exceptions. I think the flood program and medical malpractice are maybe the only exceptions. So that means after a big storm year, you have an auto policy in North Central Florida, you will be assessed fees to cover the losses in Miami, say if Miami gets hit by a big one. So there's a lot of built-in cross-subsidization to Florida Citizens and the Florida property insurance market already. And I'm not sure how well residents kind of understand that that's happening. And so like a lot of lower risk households are going to be paying the claims of the higher risk households. And it's not just Citizens, it's actually also the Florida CAT fund. So Florida is the only state that has its own reinsurance program. And like other states, they also have a guarantee association to pay the claims of bankrupt insurers. And Florida's faced some bankruptcies the past few years and had to assume those and have the state pay. And that program also assesses policyholders throughout the state to pay the claims of the bankrupt companies. So what kind of questions does that raise for fair pricing, right? I mean, like, is that a great way to spread risk and everyone's helping, or is that kind of unfair because these low risk people are having to share in those losses? I think these are the tough questions that we're going to face.
Yeah, there was a resilience effort in Miami-Dade County that was in partnership with the Corps that looked at storm surge protections. And our team at EDF has been really engaged with this over a number of years already. But one of the initial proposals that came out was actually to elevate a handful of multi-million-dollar homes, which left very little in the project bucket to deal with risk in lower income communities. And it really raised the question for folks about how we're evaluating cost benefit. The cost benefit was deemed higher to protect multi-million-dollar homes than it was to protect to a handful of them than it was to protect large numbers of community members who needed smaller investments to protect their properties. And so the question was really raised about, like, how are we evaluating cost benefit of these payouts, and should there be sort of an upper limit? If I buy a $50 million home, should I be assuming the risk of that? And we do know that there are already homeowners in Florida that are going without insurance because they no longer have a mortgage that requires it. And they're gambling on not getting hit with a big one, or praying because they can't afford the premiums. So I think I'm not sure what reforms would sort of remedy that. Are there places that are doing it well that we could learn from?
Yeah, I think you raise actually a number of really important issues. One is we have limited public dollars for the need, right? I mean, the need for climate adaptation over the next many years is huge, and federal and state governments aren't going to pay for all of it. And so I think it's a really important question to be asking: how are we going to allocate those dollars if we're not going to be able to do everything? And what role do we think about sort of equity and privilege in assigning where those dollars go? Because if people can afford to do it themselves, should we be sending our more limited dollars to the communities that really otherwise couldn't invest in the needed changes for safety? And I know the current federal administration has been doing more, like FEMA has been trying to target more of their grant dollars, I don't know about the Corps, but towards some of these more disadvantaged communities and households to help them, because we do see that there's a lot of inequity in disaster. And it starts from the very beginning that lower income communities, and often communities of color, are less prepared, have less investments in risk reduction, have less access to resources, and continues all the way through to the recovery, where they have less access to the federal dollars, less insurance dollars, less access to loans. And so there's less financial resources coming in, which slows recovery as well. And so to just circle back to the last point you made about going without insurance, if you're incredibly affluent and you can fund your own recovery, that might be a smart choice for you. But for the rest of America, going without insurance is really a very risky move, because what we see after a big disaster in the research is that disasters can widen income inequality along the dimension of whether you have insurance or not. Because if you have insurance, you get access to the dollars to repair your home, to get back into it. And if you don't, you can really spiral down and not be able to have safe housing. And then that ripples through all sorts of things in your life. And so, yeah, making sure that people have those recovery dollars is really important. And I think it's not just about subsidizing insurance for low income. It's making sure that they're not in the high risky area to begin with, right? So, yeah, lots of important things to talk about there that you raised.
Yeah, it's not, these things are not easy to sort of figure out. I was just listening to you and trying to figure out how to even have some of these conversations. I meet with folks all the time, and when my husband and I were looking for our home, we actually went elevation first, right? We knew we were living on a peninsula. We understood the risk because of the work that we both do. But there is there's an existing affordable housing crisis in the country, and Florida is certainly no exception to that. I think what I don't know if everybody sort of understands is how an affordable housing crisis actually impacts the entire community, right? So now we have this layering of, we don't have enough affordable housing, insurance premiums are skyrocketing, meaning we have now less access to affordable housing. And how does that ultimately undermine the state's economy? If we don't have workers to support certain industries. Florida has long been a population growth state. How does that play out if people are having to start to pack up and move because they can't insure their property and they can't afford their premiums? Do you have any sort of insights on kind of how we see those connections?
I don't have good answers. I think they're the really hard problems, and I think those connections are really important to be stressing and thinking more about, like you're doing, because our housing crisis and the climate crisis and this adaptation stuff and the insurance is all so tightly linked. And I'm not going to offer a solution. I'm going to offer another problem, which I know is not helpful in what you asked, but I think another challenge in looking at this whole suite of interconnected issues that you've raised is the real difficulty in our political and private sector institutions in thinking longer term. And I think there's real actual trade-offs between what's easy in the short term and what's going to help us in the long term, which is to say, it's easy to say, let's just suppress insurance prices because we need cheaper insurance right now. And let's just build housing wherever we can because we need more housing right now. But if we put housing in very risky areas, and the people that move into it are lower, moderate income because we're trying to increase affordable housing, and then they're repeatedly flooded and damaged, that's hurting them very hard financially in the long run. So that's not really helping solve the broader economic challenges. And similarly, if we suppress the risk signals that insurance is telling us right now about where risks are high, we're just going to make it more difficult down the line. So how do we actually get a more prevent and prepare mindset? I don't have an answer to that. It's something we're really bad at. And we're bad at as individuals, right? Like, I mean, one thing in thinking about insurance, which I think about so often, is that like nobody wants to buy it. Like, I don't want to buy it, even though I think about it. It's like, you hope you never use it. There's no joy in it. Like and when the sun's out, you don't want to think about really terrible things happening to you and your family. So it's sort of easy to just push it out of your mind. And so I think there's also some psychological challenges with thinking about these things too. So I didn't offer you any hope. I offered more problems.
So we'll get back to the hope in just a quick second. I'll add the link to the Florida Climate Week post that this video will be attached to. But Florida did do a group called Florida Tax Watch did do an analysis of how climate change is going to change the tax structure that supports local government, right? So we have ad valorem taxes. A part of what I pay when I'm paying my mortgage payment includes that local tax, and that money is used to fund schools and police and roads and all of those sorts of amenities that we all, require in a civilized place. And so, as you're seeing insurance rates go up, the housing costs will likely have to come down just to make sure that we have some affordability. And there are real long-term risks around what some of that ad valorem tax revenue could look like. But I don't want to go down a policy rabbit hole, which I'm prone to. But let's make sure we can sort of land on what really are the three most important things we should be doing in the state of Florida to try to put ourselves on a path towards risk reduction reform.
I think we've talked about several of them. I think the first one is the transparency in markets and the education. So things like the disclosure law that EDF was working on, and making sure that people are aware of the risk they face today, but also how that risk is going into the future. And I think that's a nut we haven't quite cracked with policy yet, is how to kind of communicate that changing risk at moments that people really need to understand it, like when they're buying a new home, when they're retrofitting. So, but sort of better understanding and awareness, I think, is number one. Number two is what we were talking about, is like building to the future climate. And so that means very strong building codes built for the types of risks we're going to see decades from now, because housing stays around a long time. And I think a lot of our policies and approaches aren't used to this idea that risk is going up year on year. There's not a new standard. There's not a new, right? It's like we have to take that into account, which means building to today's risk means you're always going to be too risky because you're always going to be behind. So we have to make those investments in stronger building, which is building codes, and is also, I think, part of the kind of awareness piece is making sure if you're going to retrofit your home for other reasons, you're doing a new kitchen, you should think about whether there are like storm protection measures you should be putting in, or to get at the root cause of the problem, decarbonization strategies in your building, right? And I think insurers could play a role in that in the rebuilding process, like we talked about. As well. And then the third, so that's the risk reduction. And then the third piece I'd put out for consideration is some of these equity dimensions we were talking about. We know how critical having financial resources is for people post-disaster. And we know that some of those people who really need it just can't access it. And so if we're going to do cross subsidies, if we're going to do targeted assistance with insurance, let's think about how to do that in a way that helps the lowest income households with the financial protection they need. This has been a federal legislative proposal going back a decade. I think the last 3 presidential administrations have supported it. FEMA supports it. GAO's put out reports. The national academies, everyone suggested this kind of means-tested assistance for the NFIP, but it's just never made it through Congress in all those years. But that would be a type of proposal that could help address that.
It's incredibly helpful. Thank you so much, Carolyn. This has been a great way to sort of demystify these complicated problems, and we can continue to sort of work toward implementing some of those reforms and getting us caught up, because right now the risk is headed the wrong direction. Thanks for joining us for Florida Climate Week.
Yeah, thanks for having me. Thanks for talking about this.